Ria Harith, a tech graduate, always dreamed of becoming an entrepreneur. After finishing her studies, she worked tirelessly, putting in countless effort of hard work. Her efforts finally paid off when she emerged as a proud founder of Harith Horizons Private Limited, a company that reflected her passion and vision. This was just the beginning of her growing concern, which led to an unending stream of questions that had no resolutions.
The Companies Act 2013? Do I need to read the entire act to run my business? The language of law is so complicated. And why my company needs to file an ITR? It's not even a person. It's scaring me off. And why do I need an auditor to do audit for me? I have a good team of accountants. Only a chartered accountant can save me from this chaos before it all comes crashing down. Hi Krushi.
Hi Ria, congratulations for your new company.
Thanks. But the compliance part of it is honestly so overwhelming.
Ria, as complicated as it sounds, the company form of organization offers you a lot of advantages such as limited liability to the owners, having a larger access to the capital, long-term scalability and reliability. Yes, I do agree having a company form of organizations makes you under the burden of large number of compliances, but as it is the most compliant way, it have a lot of number of compliances.
Oh, I get it. But GST, TDS, income tax, and whatnot, they are beyond my understanding. Do I have to pay GST every month? And what does TDS even means? Do I have to go to jail if I forget to file my ITR?
No. You are at the right place. Just relax. I am Khushi Bansal, a qualified chartered accountant, and we are Mahindra and Associates, having a 46 years of legacy in audit and assurance, tax compliances, merger and acquisitions, and other related domains. I am here to give you a walkthrough to all the compliances applicable over a company within a year. Compliance management ensures that the company operates within the legal framework. By maintaining legal compliances, company not only avoid the legal penalties but also reduces several kind of risk. And also it helps in building the reputation, integrity and reliability. Based on the temporal occurrences of the compliances, there are two kinds of compliances. One is annual and second one is the recurring. Further, we can divide the annual compliances on mandatory and criteria driven compliances. Mandatory compliances are audit, ITR and ROC filing, whereas criteria driven compliances are tax audit report, transfer pricing, FLA, SFT and many more. Further, if we move towards the recurring compliances, these are GST, TDS, PF and other payroll related compliances.
Yes. To my knowledge, audit is a mandatory compliance. But as I've just incorporated the company, I have no sales, no revenue, no expense whatsoever. Why do I need an audit then? It is just an additional cost for me.
Yeah, I do agree. Even if your business have no revenue, no operation, or even if no expenses, still audit is applicable. As per the mandatory provision of the Company Act 2013, audit is applicable on all the companies. It have a lot of other benefits such as business sustainability, accountability, transparency, increasing the credibility and operational efficiency.
Hmm. I have a good team of professional accountants to do the job for me. Why do I need a CA? I can manage it on my own.
Yeah, but the financial statements of a company, as per the provisions of Company Act 2013, can be signed by the independent practicing chartered accountant. Since Harith Horizons Private Limited is a budding company, audit plays a significant role in building the investors' confidence along with attracting the foreign investors for getting the investment in company. Every company is required to appoint a statutory auditor to ensure compliance with provision of applicable laws and accounting standard. The audit of a newly incorporated company must be completed before its first annual general meeting, which is required to be held within 9 months from the end of first financial year. The consequences of non-compliances will be a fine of rupees 25,000 to 5 lakh rupees over company and 10,000 to 1 lakh rupees over the officer in default.
Oh, I get what audit is all about. Not only from the compliance point of view, but it will also help me get the bank loan for running my business.
Right.
But Khushi, I have been filing my ITR every year. Why my company needs to file one? The whole idea of a non living entity having the same responsibility just doesn't sit right.
Just like you and me, a company is a separate legal entity in the eyes of law. As per the Income Tax Act 1961, every company have to file its ITR based on its audited financials. The filing of ITR not only ensures that you are paying taxes on the fair amount of profit but also helps you to carry forward the current year losses to the future years that can be set off with the future profits. If a company doesn't file its ITR, the non-compliances will be a late fee of rupees 5,000, an interest of 1% per month, along with some additional penalties on the discretion of authorities. With regard to the Income Tax Act 1961, as explained in the video, the government has introduced the new Income Tax Act 2025, which will replace the Income Tax Act 1961 with effect from 1st April 2026. As I have already mentioned, there are three mandatory annual compliances that are audit, ITR and ROC filing. So here we are done with audit and ITR part. Let's move towards ROC filing. What is ROC filing? ROC filing is the filing of your financial statements that have been audited by the auditors of the company with the ROC. Who is ROC? ROC is the registrar of company, the controller of the companies to whom we have to submit our financial statements along with the audit reports which have been issued to us by the auditors. So this filing consists of two forms that is applicable over a private limited company. Here, as in our case, it's Harit Horizons Private Limited. It will be consisting of two forms. One is AOC 4 and second is the MGT 7. Both these forms needs to be submitted timely with the ROC. Otherwise, there will be a late fees of rupees 100 per day or 200 per day. That may also goes to 600 per day in case some XBRL filing is also applicable to your company. Now, along with this annual filing, one more compliance that is applicable to the directors, or we can say it is a responsibility of the directors to get their DIN KYC completed for each financial year. With regard to the earlier provisions as discussed in the video for director KYC, the updated provisions are KYC filing will now be required once in the every 3 year with a revised due date that will be 30th of June. In case if we have not completed the DIN KYC, a late fee of rupees 5,000 will be applicable to each director. So here we are done with the annual compliances that are applicable on the company.
Thanks for simplifying it for me, Khushi. But unfortunately, my list of questions doesn't end here. What are the other annual compliances? And are all of those applicable on my company?
Sure, let's discuss. So, starting with LUT, let's discuss the due date. There is no specific due date for the LUT as a company needs to submit the LUT before the start of any financial year. So, for example, if the financial year for the company is 24-25, then the company must have the LUT as on 1st April 2024. What is LUT? LUT is a letter of undertaking, a formal declaration submitted by the exporter to GST authorities for making all the exports without payment of taxes during the year. In case a company forgets to submit the LUT, there will be a 18% of taxes that the company have to pay for all the exports made without payment of taxes. As we are moving in a chronological order, the first compliance applicable over a company is LUT. Moving towards the next compliance, it will be SFT. The due date for filing SFT will be 31st of May. What is SFT? SFT is the significant financial transaction, the issuance of large number of shares, debentures or large deposits exceeding the threshold limit, that is rupees 10 lakh, to a specific person in a financial year. All these transactions needs to be reported to the reporting authorities within the specific time limit. In case a company forgets to submit this filing, non-compliance of filing the SFT will be rupees 500 per day penalty over a company, and in case the company receives a notice, the penalty will be rupees 1000 per day. So our next compliance is due on 15th of July for FLA filing. In case a company receives any foreign contribution by the way of capital investment during the year, then the company have to file the FLA form with RBI. In case the company forgets to file this form FLA with the RBI bank, the non-compliance will be 300% of the amount or rupees 2 lakh as the case may be. So the next compliance is due on 30th of September, that is for tax audit report. It is filing of form 3CACD in case the turnover of a company exceeds rupees 1 crore in a financial year. If the company is having no cash receipts or having the cash receipts that is less than 5% of the total receipts and payments during the year, then this turnover limit of rupees 1 crore overshoot to rupees 10 crore. So for example, if a company is having a turnover of rupees 5 crore with no cash transactions during the year, then tax audit report will not be applicable over the company. So let's move towards the non-compliance of this form. In case the company forgets to file this form, the penalty may goes to 1.5 lakh rupees during the year.
With regard to the earlier provisions for tax audit reporting, as discussed in the video, under the revised framework of Income Tax Act 2025, the existing reporting form, that is Form 3CACB, has now been replaced with Form 26, that is for tax audit report.
So our next compliance is due on 31st of October, that is for transfer pricing. Transfer pricing is the reporting of related party transaction as per the Income Tax Act 1961 under two forms, that is Form 3CEB and 3CEAA. Non-compliance will result in a penalty up to 2% of the transaction involved.
With regard to the earlier provisions of transfer pricing reporting, the Form 3CEB has now been replaced by Form 48, whereas the Form 3CEAA, that is the master file, continues to remain applicable but with an enhanced disclosure requirements.
So our next compliance is due on 31st of December, that is for GST annual filing. GST annual filing consists of two forms, GSTR 9 and GSTR 9C, based on the turnover of the company during the financial year as per the CGST Act 2017. If a company is having a turnover up to rupees 2 crore, then only one form will be applicable, that is GSTR 9, and in case the company is having turnover more than 5 CR, then both forms will be applicable over the company, that is GSTR 9 along with GSTR 9C. Non-compliance of filing these form will be a late fee of rupees 200 per day. So the next compliance will be POSH, that is due on 31st of January. POSH is prevention of sexual harassment. It applies to all the companies, workspace and establishment having an employee count of more than 10 employees during the year. In case the company forgot to file this annual filing, the company can be fined up to rupees 50,000.
Oh, I have been negligent about the compliances that you have just mentioned. I might have accumulated a good amount of penalties by now.
You don't have to worry about it, since as already mentioned by you, the company is not having large number of transactions as of now, but still I'll go through with the books of your company and assure you better.
Oh, that's a relief. Can you please further guide me on the other recurring compliances earlier mentioned by you?
Sure. As already discussed, the recurring compliances are as follows. The first one is the GST. If a company is registered under CGST Act 2017, the company have to file GSTR 1 and GSTR 3B. The due date for GSTR 1 is 11th of the following month and the due date for GSTR 3B is 20th of the following month. The company can eitherly opt for monthly GSTR returns or it can opt for the quarterly returns. The limit for opting the quarterly returns is having a turnover less than rupees 5 crore.
Second is TDS. TDS is tax deducted at source. Every company have to deposit the TDS before the 7th of following month and have to file the TDS return, that is quarterly, before its due date. Moving towards the next recurring compliances, that are payroll related compliances such as PF, ESI and PT. In case the company has not breached the threshold limit of PF and ESI, that is 20 and 10 respectively, the company need not to deposit the PF and ESI to the authorities and there is no requirement of taking the registration. Along with the PF and ESI, one more payroll related compliance is PT. So if in case the company is registered in the state where PT is applicable, such as Karnataka, the company have to take the PT registration, otherwise it is not required. Let's move towards the other recurring compliances such as advance tax payment, equalization levy deposit. So these are the quarterly and monthly payments.
This feels like I'm gonna spend all my time on these compliances when I'm actually gonna run my business. how can I deal with the endless paperwork and deadlines?
Agreed. Don't worry. We have a solution for that too. Let's discuss over a cup of coffee. There are two ways. You can have an in-house compliance team which involves hiring dedicated professionals and specific employees to oversee all the compliance related activity within the company, or you have another option to outsourcing the same to professional persons who have an expertise knowledge for all the compliance management for your company.
I think I can relax now. I can outsource the compliance work and focus entirely on running my business and creating value for my company.
Absolutely. Outsourcing the business makes you free up with your time and energy. You can concentrate on what matters to you, that is, growth of your business, efficiency in the operations, and providing a value to customers. Just make sure to choose a reliable partner for recurring compliances who understand your business, your industry, and keep the things running in a smooth flow behind the business.
Thanks for breaking it down for me, Krushi. It's relaxing to know what's expected and have a plan in place. I'll rely on your expertise. Looking forward for working together.
Same this side.